China's stock crash continues. What next? Hello, this is Charta GPT today. While we have all the geopolitics going on, Ukraine, what's going on in the Middle East, we do have to keep an eye on what's going on in terms of the financial markets going down in the rest of the world. Of course, China being the second largest economy in the world, we should pay attention. Usually these stocks kind of give you an idea where things are going. We'll have other indexes here to look at. But here's a report coming out of Bloomberg that foreigners sell-off of mainland shares continue. Of course, we may be adding an additional issues with the geopolitics on the China and the Taiwan situation. Not sure where that's going, but so far it hasn't heated up to the point of the same level of Ukraine and the Middle East. But there's always that risk. But people are exiting quite dramatically now in the Chinese shares there, so it's quite of a concern that we need to think about. Here's the what they call the CSI 300 index, capitalization of weighted stock market, designed to replicate the performance of the top 300 stocks on the Shanghai Stock Exchange and the Shenzhen Stock Exchange, and so you can see that, and it's way down. It's basically lost. It's starting to take a nosedive. Some of the more proxies to this, Baltic Dry Index, it's been up and kind of had a sharp rise during the period of the COVID, and of course you go back to 2008 before what they call the Great Recession. Baltic Dry Index was also really peaking because of global trade, and so what you can see, it's been gradually going down slowly. If you take away that spike in 2008, it's presently going down, had the spike in COVID, but the general trend is down. So global trade is receding. Of course, that may have an effect from the geopolitics and the financial situations in the West and their ability for the masses to buy products. We'll have more charts on that later. But the point is, it's going nowhere, and there's no growth there, and for the Chinese to save them from what they are. So this is an interesting point to be considered. Taking another proxy to this is the Australian dollar, because it's often thought of as if you don't want to invest directly into China, the benefactor is Australian. You can see that in terms of trend and movement mirrors it, and it's been sinking to low levels as well. It's probably going to go further down here, but it's kind of reaching a limit. Not exactly exactly, but it is. So let's get directly into the Hang Seng here. You can see here that back in 2008 at the lows, it broke a trend line back in 2022, and it's beginning to trail off. It had a kind of a spike down in 2023, early 2023 to late 2022, but it looks to go lower and may match the 2008 level. So that's kind of the call now. You ask the AI, what are the key considerations when investing in China? Take a look at that. And we asked the polling question, what do you think? Where do you think the Chinese economy is going, and maybe reflecting in their stock market? Give us your opinion in the poll. Check out the post link in the description box, and don't forget to subscribe.